we don't have that many sites with Sprint today, and they're going to put 10,000 new sites up, and they're going to favor private tower companies. We're good. I mean, I think we would be net positive if they do that. And I do think a third healthy carrier who's growing is a lot better than four, where two of them are, don't have free cash flow to invest in 5G. I won't say they're not healthy, but they don't really have the cash flow today to invest in 5G. And I think this gives them the opportunity, by the two of them combining, to have the cash flow to actually invest in 5G, and whenever 2020, 2022, whenever it happens. And then the other piece, and we talk about it a lot internally, is I'm not sure there won't be another fourth network. The FANGs have to do something at some point. Facebook, Amazon, Apple, Netflix, and Google. You've got a guy out there with nationwide spectrum who spoke earlier today as a keynote. He's clearly going to do something with his nationwide spectrum. And then you've got the cable companies. You've got Comcast. Comcast is in the wireless business, whether they know it or not. But when you're going to sign up 2 million subscribers next year, you're going to need owner economics sooner or later. Mm-hmm. You can't keep using Verizon's network and do it profitably. So I'm not sure there won't be a fourth network, and I think the near-term impact on us is going to be, I think we'll do better with their growth than we will with their decoms.
Clayton.
Yeah, for those who've been in the industry for a while, if you remember the Sunday before what was CTIA back in 2011, everybody's phones blew up when the AT&T and T-Mobile merger was announced. And I remember at that show, because it was about 3 or 4 days of meetings where everybody's walking through a little shell shock, like what the heck is this going to mean for us? I think the certainty of that deal getting done was what, 80 to 90%? Mm-hmm. And it didn't happen. So, we can sit here and say, I think it's going to happen, but nobody really knows. I mean, we'll see how this all plays out. I think from our standpoint, when we're representing a tower owner selling their assets or going out and raising capital for a company providing shared wireless telecom infrastructure, Sprint was never really forecast as a tenant on these towers. So, there will be potential hit if you own towers and you've got T-Mobile and Sprint on the same tower, and in theory, maybe the Sprint network gets decommissioned in several thousand sites. But going forward, and this is where I think Ron's going to shove me off the stage as he tries to buy towers, the valuations we don't think really change when people are trying to buy assets. Because if you're buying towers, we haven't seen any buyers telling us over the last several years that they think Sprint's going to be a tenant on those towers, if they're not already. So, that doesn't necessarily keep, at least us up at night, necessarily. I do think, though, it will have, the potential impact if you're decommissioning cell sites if you own towers where there is overlap.
But are you telling potential tower companies you might represent, you're not saying, let's move it along because the window could change? And meaning if you're going to have 4 customers now, even if Sprint's call it a half customer, mm-hmm. Then that goes less. Is it time to sell now if you're thinking about selling?
Don't be telling me things wrong. No, it is prices have been high, record highs right now. So, and I know this sounds self-serving, representing sellers. It's the greatest time to sell as any. But I don't think necessarily, Jennifer, that we'd be sitting there saying to anyone, hey, look, rush to the exits now because of the uncertainty. I just don't think that that's necessarily a catalyst for it. I think really, and it's a whole nother discussion, we say, look, rush to the exits before prices go down due to interest rate risk and a few other things, but not necessarily because of the merger announcement.
As a buyer, I just want to chime in a little bit, but as a buyer in a group that's, we've been a pretty prolific buyer of towers over the last 4 years, I'll tell you that as we're underwriting today, we're being very thoughtful if Sprint is a tenant on a tower. And we've got to do a deeper dive analysis to figure out whether we think that's a long-term tenant or not. And I think we'd be irresponsible if we didn't.
Folks that are in the rooftop acquisition business or rooftop rights, I do think would need to be particularly sort of cautious about what they buy. A good percentage of those 35,000 assets are said to be those types of structures, not necessarily what we consider traditional towers. So, the rooftop business has always been concerning to a lot of us because, in theory, there's a rooftop across the street. If you're looking at buying, long-term rooftop easement rights or buying out just the cash flow of a Sprint or T-Mobile lease, I think you should be concerned more so with Sprint, because I would imagine that most of the Sprint network's the one that gets decommed and not T-Mobile.
And I'll take a different look, which is, I also think that, running a network of 60,000 customers as opposed to 115, 120,000 customers is completely different. And that's going to present challenges for the surviving company as well. And while it's great to say they're going to decom 35,000 sites, maybe add 10,000 more in, I think those numbers are going to come down dramatically when they start realizing the demands of a network of 100,000 plus customers.
And that's actually a perfect lead into my next question, which is, it's my understanding that the only deal in the space that really saw more decommissioning than net additions or net site was T-Mobile Metro PCS. And one of the things that Neville has said to me is this is going to be the same, we haven't said that to the street, but the same playbook. But, they will shut down, like we did with Metro PCS, we'll shut down Sprint and redeploy that spectrum. I guess my view, just having followed Metro PCS, that was kind of to your point, a very different company. I mean, it was prepaid, those people were churning at 4% a month, that's up 50% a year. Sprint, for, some might think of them not a great company, there's, 50 million customers who are churning about 2% per month. That's harder to do. But Neville has said to me, listen, I'm going to teach the tower companies and the backhaul companies the ways of the world. So, but it's hard to write. I don't doubt him, but it's also hard to do when you kind of consider it from that perspective. Thoughts?
Yeah, look, what I'll say, I'll go back to my repack story. I would never discount T-Mobile. They're planning now, Neville's planning now.
Yes.
And if he's saying he's going to discount 35 or decom 35,000 sites, I'm pretty sure he's planning to do that.
Okay.
He may not get to 35,000, but it'll be more than just the overlap of where Sprint and T-Mobile are on the site. A lot more.
I think it'd be an interesting exercise, Jennifer, to see what the data usage was on the Metro network and how much data usage was really then loaded onto the T-Mobile network versus, in theory, how much data is pushed through the Sprint network, and then trying to take all that data usage, which over these years, from how many years ago was that merger consumed versus how much data wireless subscribers are used now. I think I'm giving that because I think it's a very different, I think they're very different companies, right? I mean, to your point, it wasn't just the type of customer base and everything else, but I mean, what was the percentage of voice traffic and data traffic that Metro subscribers are using versus what Sprint users are doing? I just think it's a very different analogy. And again, technical side, I'm sure there's many different answers. That's not my forte. But I think there's a lot of data if you're moving from Sprint all the way over to the T-Mobile network.